Good morning. It is Tuesday morning. The market's been open for 30 minutes. It is May 27th, 2025, and hopefully everybody in the US had a really nice Memorial Day weekend, had some fun, ate some good barbecue, or whatever you did for fun. And the market is enjoying a good day today. We have a market where the Dow is up 0.95, S&P is up 1.28, the Nasdaq is up 1.56. Really, really good morning, and it's driven primarily from the fact that the tariff on and off news is really affecting the market. The president announced that hey, the tariffs on Europe would be delayed, postponed. So that's what's driving the market today. And I did see some good economic data out of China, which was interesting. Uh, their industrial profits were better than expected, showing that the tariffs haven't really impacted China yet. So that's really good. So the market's going good. Looking at crypto land, crypto's up at Bitcoin is up to $109,883 per coin. It's looking good. It just flipped up to 110. And Europe had a good day. I'm not sure if they've closed yet, but in Germany, stocks are up 0.65. In England, stocks are up 0.69. In France, are up just a tiny bit. So it is a good day. It's a green day. It's a nice green day. I'm looking at the heat map. Looks like the usual suspects are going up in value. NVIDIA up 2.54, and they're going to announce earnings tomorrow afternoon or evening. That's going to be huge. I'm going to do a live stream watch party. Look for notification on that. It will be really interesting to read NVIDIA's earnings and see what they had to say. It's going to be interesting. That stock can really move on the news that they're going to release tomorrow after the market closes. There's some substantial earnings out there. Another company that's announcing tomorrow is Salesforce. And Salesforce today made some news because they're acquiring Informatica. Informatica is a software company. Informatica, they do ETL tools, extract, transfer, load processes, and that means big data. You're taking data from one system, getting it ready, and then putting it onto either a data warehouse or a data lake or another system. So you can do integrations with Informatica. So they acquired that company. It's more of a software infrastructure play, and it's a little bit of an old school company, I must admit. They were born, I don't know, 30 years ago, and were made before the cloud was a big thing. But I think they've adjusted well to the cloud. And Salesforce is going to acquire Informatica. So acquisitions, I think, are going to be more of a thing going forward because we have an administration that's not going to block acquisitions like the previous administration did all too often. So that'll be interesting to track. I'm sure Informatica investors are happy today because they're probably being paid a nice premium and they're probably enjoying this Tuesday morning more than the typical investor. Apple is up nicely. Boy, they need an update. Apple's kind of been in the doghouse for a while. Broadcom's having a good day. Google up nicely. Google's having a nice, call it a week. It's probably up over the 1 week. Let's see if we can go 1 week here. Yeah, Google's up 3.24, and that's with a kind of a couple, one bad day last week, maybe two bad days last week. Google's still up 3.24, so that's real good. Meta's up nicely. Netflix is up. So there's a lot of green on the screen. Amazon is up. Nice. Tesla's up. There's a lot of green on the screen. Looking good, looking real good. And again, let me refresh this guy. No big surprise. Um, looks like technology is the number one sector. Technology stocks are going up the most, and then communication services, that's Google, Alphabet, Meta, Netflix. So yeah, it makes sense. And then consumer discretionary. So it's risk on. It is risk on. We're not going to have tariffs with Europe. Let's start making some money. Looks like we've got 10 people on the stream. Thanks so much for joining. It looks like Android PC. Good to see you. Carlos, very good to see you. Good morning, both of you. And excuse me while I drink my morning coffee and go over some stocks with you. So on this stream, I wanted to go over the positive news and go over some stocks that have announced. If you have a stock that you'd like me to go over, if you're a member, you can put a stock ticker out there. I'll review it. I'll analyze it. We'll look at the free cash flows. We'll see if we can assess to see if that stock is being priced at a premium or a discount. If you're not a member, consider being a member, and then you can have that perk. Or you can pay $5 for a super chat, and I will analyze a company the same way, which is taking a look at the company story. Are they competitive? Doing some fundamental analysis, looking at free cash flows, looking at all those things to arrive at an opinion of, is that stock a good idea to do further analysis on, potentially invest at some point. So consider those options, and let's start looking at some individual stocks that are making news today. So one stock that announced today is Pinduoduo, and PDD was down in the pre-market. Now they're down 17%, and I looked at their earnings, and let's look at that together. But before I do that, let me just kind of set the table, and then we'll look at the earnings. So this is a high growth company. You can see their growth. That's really, really good. This is a Chinese company. You can call them an e-commerce company, a supply chain company, and that's what they do. They had been operating really well. The reason why the stock's discounted is because they're in China, and investors are a little bit weary about investing in China, for a variety of reasons, obviously. Free cash flow looked great. Margins look good. And profit looked really good. So this is what they had been doing. Really, really, really good. Now, when we look at the earnings, it was a little bit of a shock. Revenue only increased by 10%, but they were growing at like nearly 60% previously. So it's like, whoa, what happened? Operating profits decreased by 38%. All right, what happened? So there's a lot of what happened questions in this earnings, which is why the stock is down 17%. When you have such a different earnings from what they have done historically, it leads me to question a couple of things. First is the story of these guys continuing to grow, is that going to hold up? Or is it maybe the best days for PDD behind them, and they're not going to do all that well? Well, that's one of the primary questions behind PDD, and the reason why the stock is selling off by 17%. And I'm going to look at the company desirability. So I like to consider a company's desirability because it tells me what kind of discount would I need to buy into a stock. Probably the strongest player in Pinduoduo's ecosystem is going to be Alibaba. Alibaba is the biggest name, it's the biggest stock that's publicly traded in the United States. And these guys are strong. So they have the best brand. And this is a very good investment. I own Alibaba. Walgreens would be an example of what I don't want to buy. This is a company that's losing market share, revenues going down, low profits, losing money, negative cash flow. It's in the red. It's uninvestable unless there's something else, a special circumstance that I want to invest in. But for the most part, I don't invest in the red. In the gray, I'm willing to invest at a really good discount. In Pinduoduo, I put mostly in the gray with a little bit in the green. I think um, they have a strengthened moat. I think they do have a good brand. They have and let me go take it through the scorecard. When I look at competition, Pinduoduo does do business differently than Alibaba. It's more of a supply chain play, and I think that makes them a little different, which is good. The network power is good. It's not an A, but it's good. Balance sheet is an A. They have almost no debt and they have a lot of cash. If you look at their balance sheet, it's like, geez, why are you guys holding so much cash? And if you're gonna like uh, kind of question why do you have so much cash, that's the right situation, right? Like, why are you so wealthy? So the balance sheet's just terrific. Revenue growth, we just went over that. Hey, you were growing really well, just stupendous growth, and then boom, you hit a wall. 10% growth. What was that? Then you have profitability is very good. I'm gonna keep it as an A because it's very good, cash flow. But this C is what's really bothering me, and potentially this is the beginning of the unraveling of their story, of their mission statement, of what they're trying to do. So for that reason, I put Pinduoduo mostly in the gray, which means I would invest in a company like this if it had a really strong discount. So that's where I put the company's desirability. Coming back to their fundamentals, when we look at their forecast and what analysts think of Pinduoduo, you have 11 analysts looking at this company. They think there's a strong discount available on Pinduoduo, 50% discount. That's a strong discount. And understandably, again, when you buy Chinese stock and you look at fundamentals comparable to a US-based company, you're going to see these strong discounts because that's the difference in a stock that's in US versus a stock that's in China. That's just a reality. That looks good. Now, when we look at their fiscal year, they're going to continue to grow. That's the assumption. Now, we just saw a quarter where they only grew 10%. So is that the beginning of something of a bad trend? Could be. We got to study the next earnings call really closely because if you have two bad earnings, that's going to be really concerning for this stock. But for the meantime, we'll say, okay, they're going to grow in the mid-teens going forward on the revenue. Earnings per share is going to be really solid. These guys do make good money, real good profits. So they're going to continue to crank out that free cash, and they're going to have a really low PE. That looks really good. So overall, it's a discounted company, really nicely discounted. And it's a pretty good size cap, right? It's $140 billion market cap. So it's not like a tiny little company. It's a pretty good market cap. Revenue is 54 billion, so you're paying 3 times revenue, and the PE is really low, really nicely discounted. Year to date, this one's, you're basically holding the value of your stock and keeping up with inflation, I guess. Over the 1 year, it's really down. 5 year, it's not a disaster, but it's not a great success story. So PDD, I think I can't argue with an investor buying into PDD. I invested in Alibaba. I got a pretty good position in Alibaba, and I'm going to stay there. But again, I would consider buying PDD. I think it's a decent stock, good company. But I have to get an explanation as to why their revenue came down. And, management's not going to come out and tell you exactly what's going on. They're probably going to tell you generally what they want you to think about. They don't want you to think about maybe a problem they have. They don't want you to think about their competitors and how strong their competitors are getting. They're going to tell you a story. We have to look at the fundamentals and form our opinion on that company. So PDD right now is going to be a pass for me, but I can't argue with an investor wanting to buy. One investor, coincidentally, that is in Pinduoduo is Tepper. And I released a video this weekend, and he was number one. in the list of investors that I track. But with Pinduoduo being his second largest position, it really took his portfolio down, and he lost the title. And I'm not sure it's a big title, but he lost $77 million on Pinduoduo today because he owns so much of the stock. With a pullback of 17%, it really made a difference in his portfolio, and it moved him from being number one on this, ranking that I track, and Michael Burry's back on top. So David Tepper, his portfolio went down because of Pinduoduo. I wonder what he's going to do with it. He did lower his investment in Pinduoduo from it being much larger to a lesser amount. So he had 519 million invested in Pinduoduo, and now it's, thanks to that 17% drawdown, it's down to 432. But he had sold some shares. He had sold some shares in the beginning of the second quarter. So that's where one investor that's been hit with a correction on Pinduoduo, which leads me to think, what other super investors own PDD? Let's take a look. Let's see who else is an investor. So 6 investors, well-known investors, super investors own it. So we just went over Tepper, Norbert Lau, Vinol. Oh man, he owns it. And he owns about $39 million of Pinduoduo. And then we got Duan Yongpin. He owns a lot. Man, that's a big position. Almost $1 billion of PDD. So that's not a fun day for that investor. Chase Coleman owns $500 million. Not a fun day. That one's got to be oh man, I hate it when the week starts like this. I've been there. And then Poland Capital owns about 7 million. But these super investors are really feeling it, as well as Tepper. Tepper's really feeling it. See how the value of Pinduoduo stock at the beginning of Q2, because that's what this website tracks, was 517 million. But now, based on the current stock price, the shares are worth 432 million. So big haircut on Pinduoduo for Tepper. So interesting how it's moved and who's getting knocked around. So Shadow Guy, good to see you. Xiaomi, man, God, Xiaomi, every time I go over that stock, I'm more impressed. And I'm impressed that this company is a new player in mobile phones, for the most part, smartphones. But the other thing is they're a new player in electric vehicles, and they're really good at both from what I can look at. And look at their stock, up 51%. And for the 1 year, up 179%. 5 year, up 328%. So this company is really special. And, I own a little bit of it through an ETF I own of Chinese stocks. And they are traded on the Hong Kong exchange. I can't buy them on the NASDAQ. I can't buy them, the New York Stock Exchange. And I think that's been my reluctance in investing directly. But I think I'm gonna rethink that, do a little bit of more homework, and maybe venture out a little bit, see if I want to buy direct and buy some Hong Kong stocks. So I'm going to put that as a homework item for myself. Every time I look at this company, I'm thinking, this company's really getting it done. Strategically, I understand their phones are really good. Their cars are good. They have some competitive advantage of being in China, and they have manufacturing capacity. They have production cost efficiencies as an advantage. Just a lot of good things that I continue to see and see. So I'm going to start a little bit of a research plan on Xiaomi and see how I can buy that stock in the Hong Kong exchange. and I'll keep you guys posted. But thanks for bringing that up, Shadow Guy. This is one of the stocks you brought to the table, and I think it's a real good one. And out of curiosity, and I apologize if I forgot, but do you own Xiaomi? If you can comment, I'd appreciate that. Genetic Smite. You bought them before Liberation Day. Good. Bushy 1147. Good morning. Hopefully you're having a nice day. Hopefully your stocks are up nicely. And Bushy, Shadow Guy, if there's a stock, other Xiaomi, let's take a look at Xiaomi and kind of look at it a little further since Shadow Guy brought it up. And we'll take a look at that. All right, so I'm going to move this guy over here. Okay, we're going to be dealing with the Hong Kong currency. And let me get my conversion rate. And then we can kind of take a look at this and see if this stock, where the stock is priced, and see if we're seeing a discount or a premium for this stock. So HKD to USD. So it's going to be 0.13. All right. So back to the fundamentals. So this is going to be 1.3 trillion. And I wonder, say 1.3 trillion. So that's going to be 130 plus. It's going to be about 170, 180 billion dollars market cap. PE ratio of 52. That is a pretty high PE ratio. We'll see what kind of the sales growth rate they have. If they have high sales growth rate, then that's a deserved PE ratio. If they're just a slow grower like an Apple, they don't deserve 52. We went over the gains and so forth. All right, let's take a look at financials. So they have solid growth, and the revenue on this company is roughly, see, 2639 billion. They're about a $50 billion market cap company, revenue company, excuse me, and they're growing at 35%. That's pretty solid growth, and the growth continues. 48% looks good. So these guys are growing in two areas: the phone sales as well as EVs. And it looks like Shadow Guy, you're also invested through an ETF. Interesting. When we look at their profitability, let's take a look at that. Good free cash flow. 32 is going to convert to roughly about 4.4 billion in free cash flow. So I'm going to note that cash flow and see if I can do a quick, back of the napkin valuation and see if this is a stock that seems discounted. I should do more homework on it. So gross margins, now their gross margins are 21%, which is not very good because in automotive sales, that's what you're dealing with. It's a low margin business. You got to put a lot of cost into that product in order to sell it. Same thing with phones, right? You're buying semiconductors, you're buying all kinds of components to put into that product, and then you sell it to your customer. The profit margins are a little low. I mean, that's 6.47. That's not very good. Free cash flow margin, that's not exciting me either. They're kind of low, actually. So this company, based on these ratios, I like the growth, but I'm not in love with their profitability and free cash flow generation, must admit. So I'd probably go 15 times their free cash flow just to kind of tell me, minus debt, and I don't know if they have any debt. So if I were to do that, I would get to, so I'm going to get to about, so 480. So 480 billion of this currency is what I think their value is, and they're trading much higher than that. So at this point, I'm gonna pump the brakes on Xiaomi. I think it's great what they're doing, but what is hurting my desirability of the company is the profitability. I mean, look at this profitability. It's not very good. Let's take a look at what Alibaba's got to show there, and maybe we were just in Pinduoduo, but we can take a look at Baba really quick and see if there's differences there. Alibaba's not growing like Xiaomi. It's growing, but it's not growing by leaps and bounds. But if you look at the margins here, the margins are better. This is a big revenue company. This is like an Amazon. This is like a Walmart-like company. And the profit margins are 13. That's almost double what Xiaomi has. And then the free cash flow is low this year, but historically it's been really good. So these numbers are, I think, better fundamentally than Xiaomi. Xiaomi has greater growth, no doubt about it. It's just they got to expand those margins. And maybe they're in a growth mode right now, right? They're probably their automotive business is growing by leaps and bounds. And if that's the case, I mean, you could see them growing for a year or two and then beginning to expand their margins. Once they have that market share, they could focus on, okay, let's get really profitable. That might be their strategy. So I am going to do a little more homework just because I keep seeing this name and they keep making positive noise. They keep taking market share away from Apple on the mobile phone side, and they keep taking market share from all EV players. And the Chinese EV companies, I mean, they're showing up to play. They're doing really well and they're taking market share. So overall, I think Xiaomi is an interesting stock, but I'm not ready to buy into it just yet. Really appreciate you bringing it up, Shadow Guy. So let's take a peek at where we're at with the market. And we're still up. NASDAQ is really running up, almost 2%. Nice. Awesome. And let's take a look at some big stories out there. So the big story is the EU noise, right? Or the EU news on tariffs. That looks good. All right. So, oh man, a 2% on the NASDAQ day. Man, I love Tuesdays. I love Tuesdays when you have such a nice market. Come on. Oh, beautiful. Oh man, let's take a picture of this. Beautiful. NVIDIA. So that's going to be the huge story. We'll take a look at NVIDIA here. It'll be interesting to look at it today, make some predictions of what's going to happen tomorrow, see how the stock's going to move as they announce their earnings. Tesla's up 5%. Wow, excellent. Google 2.3. Man, looks good. Semiconductors on fire today. Look at that. You have AMD up 3.77. I don't know if Mike, the dividend investor guy's out there, but he's big on AMD. When AMD, flourishes, it becomes the next trillion-dollar company. He's going to be wealthier, I guess. So good for him. And everything in semiconductors working. Man, awesome. Wow. So interesting comment. Last comment on Xiaomi here. So they're pumping into chip development. Isn't it interesting that companies are developing their own chipsets now for their product because they understand, what workload they're going to put on that chipset, and they get to engineer it more. I just got a Samsung device, and I believe it has the Qualcomm Snapdragon chip in it. And I'm so far so good with the new Samsung. I cut over from Apple over to Samsung, and before I had an Apple iPhone, I had a Samsung. Loved that device, and I must admit the iPhone has been a good device as well. But I felt like the the Apple ecosystem was a little too closed. I mean, we're 2025, man, and I also felt that Android devices are ahead on the AI front. So made the cut over. So far, so good. And I'm happy with, but it's only been a week, but I'm happy with the phone so far. Uh, ask me in a year, and I can give you a real, hey, this is what I think. So, all right. So back to the market here, looking at the heat map. We've got, man, stocks are flourishing today. Very good day, man. So May, having looked at this map here, May is going to end up being a positive month. Look at the monthly, right? This is going to include maybe a day or two in April, but by the end of the week, we're going to be up nicely for the month. Very nice, very nice. And my portfolio appreciates it. A day like this is really going to send me up, probably up 10%, maybe 11 for the year to date, which is nice. So May, unless we have a, a brutal drawdown tomorrow, Thursday, Friday, I think May we're going to end up in the green. That's very good. So that's good to see. All right. All right. So looking at, let me close something out here. All right. So we looked at the heat map. That looks good. Let's take a peek at sectors again. I think they're not going to tell us anything new. Just that technology is flourishing today, up more than 2%. All right, go technology. And let me look at the big cap stocks. And major caps, Microsoft is on top. Microsoft's having a good year. Very good year. NVIDIA's having a good year. And Apple's not having a good year. But they're having a good day. Maybe they're on the road to recover. Tesla's on the road to recover here, down 11.88%. So the big cap stocks, several of them are still deep in the red. Google Alphabet's still deep in the red. TSM's slightly in the red. Berkshire is in the green, having a decent day. So interesting. All right, cool. So we went over Xiaomi. I don't see any other stocks. So just real quick, it'd be great to have some of you become a member of the channel. There's 2 new members that came on, and I wanted to just remind new members, when you become a member, please give me your email address. And my email is victorhinvesting@gmail.com, and I want to get your email address so I can give you all the perks, and includes coming to member calls, includes getting access to member-only videos, which I produce 3 to 5 a week, including going over my portfolio, sharing that with you. So please get that over to me because we've had a good rise of members. I appreciate that. And I probably have about 5, 6 members where I don't have your email address. And I want to make sure you get all the value from the channel possible. So please give me your email address, and you'll be added to a shared folder where you'll look at my valuation tools. You'll also get access to a copy of all the valuations that I perform on a monthly basis. You also be invited to member-only investor calls. We had one this morning. So again, just a reminder and a thank you to all the people who've signed up. I really appreciate it. and look forward to engaging with you guys to collectively just become better investors. If you're not a member yet, it's really easy to join the channel. You just go to this icon here within the channel itself, and you click on it. You have different choices that you can go with, and I'd really appreciate your consideration of that. And just while we're at it, see if I can, nope, I can't see it there, so I'll skip that piece. But again, all the members that have joined recently, thanks so much. Appreciate it. Please get me your email so I can get you all the perks. All right, back to our regular scheduled programming. The next stock I want to cover is a little more mainstream, and that is automotive. AutoZone. AutoZone reported they're down 2.72. These are the stocks that I'm not in love with, but man, look at this 1 year, 34%. That's a beautiful chart. Talk about consistency. Jeez, what is this? Is this like a savings account? Beautiful chart. So I don't like these businesses, but man, maybe I'm looking at it the wrong way because the performance on this stock's just been excellent. This is a $64 billion market cap company. Revenue, $18.67 billion. So investors are paying about 4 times revenue for the company. PE is 25. Forward P is 24. Strong buy, but it's fairly priced. And it's down today. So what happened? What is going on? So February 15th. Interesting. If that's the period. We'll open up their earnings release in a bit, but just a high level. This is why I'm not in love with this business. Is it's a slow grower, 5%. And you saw the stock jump. So every time I look at AutoZone, it just seems like it's priced too high. And I always end up, no, it's just there's just better situations for me. But investors like this stock, AutoZone. And the story on AutoZone this year probably looked really good as we saw tariffs affect car prices. Car prices went up. And for a period of time, used car prices really went up. And for an auto parts retailer distributor, if you have people holding their cars longer, owning their cars longer, that's good news for them because they're going to be able to sell more parts for that person to operate their vehicle. All that makes sense. Now, the slow growth is not really exciting to me. It's, I could buy slow growers like this all over the place. I can buy Campbell's soup and it grows about that rate. Free cash flow, it's not making me overly excited because they've had better cash flow in the past. They're not growing that cash. So they're slowly growing their revenue, but look at their cash. It's not growing. Well, that's not overly exciting. Profit margins are decent, 14% margins. That's very good. Maybe that consistency is what investors really like. And then you have free cash flow margin of 11%. So that is decent, I must admit. But when I look at free cash flow, right, and we look at an annual rate of $2 billion, and I say, okay, it's a slow grower. I'm going to multiply times 15. I would get to about 30 billion minus debt. How much debt do they have? Well, let's take a look. They have roughly $12 billion of debt. So 30 billion minus 12, down to $18 billion market cap value. I'm not even close. So the market thinks very differently than I do about AutoZone, and that's okay. I'm going to stay in my lane. I'm going to keep making money, and whoever's investing in AutoZone, they can stay in their lane and keep making money. But AutoZone for me is a sell. It's not a stock I want to invest in. They're not growing. They don't make a lot of money. They're in a very old industry with lots of competitors. And I would say, why would I be excited? Why would I expect AutoZone's going to be worth more than twice their current value in 5 years. I just don't believe in that story. I don't see fundamentals that are making me rethink that story, and therefore it's a pass for me. It is a sell. Let's take a peek at which super investors, if any, own AutoZone. We got 3 super investors that own it. Now, my favorite super investor, Pat Dorsey, owns AutoZone. And even knowing that, I'm like, why does he own it? What? He owns it for a reason, and he's done well with it. He's reduced his position a tiny bit. He owns $143 million of AutoZone. Wow, that's a good chunk. And other 2 that own it, Tweety Brown and then Lee Ansley of Maverick Capital own it. Interesting. Okay. So that's who owns AutoZone. I'm still not in. I think it's an interesting, beautiful chart, but I just never get it. And I think AutoZone fits in the category of Costco. I just have never gotten Costco. And some investors invest on story, purely on story. Hey, Costco is going to continue to grow. It's, all these things. Charlie Munger was big on Costco. I get that, but I want to have the story and I want to have the fundamentals too. And that's why I go into fundamentals. I value companies. I go through my valuation techniques, and then I arrive at, okay, the story is held up by the fundamentals. The fundamentals actually show the stock's, worth a lot more versus what if the story changes? What if tariffs really affect AutoZone? Am I going to be sitting there holding the bag and thinking, why did I buy a slow grower at a PE of 25? I should have limited it to, if you're a slow grower, the limit's 18, maybe 16 on a low margin business like they're in. So that's what goes through my head. And I'm going to stick to my process. I'm going to stick to my process and keep making money. So that is AutoZone. They announced today. The market is selling it off a little bit. Not too bad. We went over Pinduoduo. What other earnings were out there? So today we had AutoZone report, Pinduoduo. Then after the market closes, Hiko, I'm not familiar with them. Okta. Okta does like single sign-on software. So back in the day when single sign-on was like a new thing, Okta was kind of a pure play, call it security software, but not really security software. It is in the category security, but it's for people that want to sign into a big company that maybe runs, 3, 4, or 5 different applications. You can really waste a lot of time for the employee if they have to log into each application. Instead, they get an Okta technology and then they log in once into that enterprise and then they can access all the different applications within that enterprise. So that's their reason to exist in the marketplace. And they're an interesting business. I believe it's a slow grower as well. I'm going to open that guy up. And then I'm going to look at Sociedad Química. I think this is a miner. Let's take a look at that. Miners have been doing really well. And we have Sky Champion Homes. This is a home builder. I'm curious to see what this home builder is doing. Box is a storage company. It's kind of a consumer solution where people can go, and small businesses can go save their files and stuff on. So it's probably 10 years ago is pretty hot, growing really well, but now it's a slow grower. I'm not sure I'm excited about that business because, you got all the big players, including Microsoft and Google, offering storage. And how many accounts does a human being want to have, right? I'd rather have, I hate to say it, but I'd rather have like one Google account and it does 20 things for me versus having 20 accounts across 20 different companies. And my life just became that much more complicated. So I think the story on Box is not great for the future. Semtech, what does Semtech do? Let's take a peek at that one. I'm not familiar. I want to say the name sounds familiar, but I can't remember what they do. All right, let's jump into it. So Okta, I do know what they do over the past, man, look at that year to date. Beautiful, 58%, 28%, because it looks like it had a drawdown and then it's really risen nicely. Why did they rise too much over the last 5 months? Growth of 15%, so that's good. It's kind of a smaller company, 2.6 billion in revenue, right? So it's not a gigantic company, and they are up 12.7% in the last quarter. So their growth is slowing down by a percentage ratio because this number keeps getting bigger. And the law of big numbers, it's hard to continue to grow at the same percentage rate because your top line revenue keeps getting bigger. So good growth, 15%. Gross margin is really good, 76%. Profit margin is really low. Their operating expense is really high because they have to keep redeveloping their software and making it better. Okta has to compete against big forces, which include Microsoft, Google Alphabet. There's a variety of single sign-on solutions out there now. So they're faced with steep competition. And it's showing up in this profit margin because they have to put so much R&D into their product to continue to just get better, or their customers will replace them and say, no, we're just going to go with the Microsoft solution. The free cash flow looks really good, 28%, looks really good. So looking at, where's that free cash flow line? Free cash flow line, 742, that looks good. And you see the growth in the free cash flow. It looks really, really good. When a business begins to grow cash flow, it's a very good sign. It's a sign that it's a very desirable business because they're making lots of money. It's a moment of caution if you see a business that isn't growing cash. It's like, well, what happened? How come you can't generate more cash as you get bigger? This business is really showing that, hey, as we get bigger, we start cranking out cash. So the cash flow growth is better than the revenue growth. So if I take that cash flow number and multiply it times, say 20 to 30, just to give myself a range, I'm going to get to about 15 to 23 billion in market cap value minus debt. And I'm willing to bet you they probably have cash on that balance sheet versus debt. And I am correct. They have $1.5 billion of cash. So they're going to be a $16 to $25 billion market cap value company. And they are at 22 billion. This run up in this stock is making this stock less desirable, but you could see that other investors were seeing that. And the trick was to buy this stock here. The software space has had really good opportunities for investors. The whole AI build out data center companies have been taking a lot of the capital inflows, and software companies were kind of left off to the side. This company, I think, is really risen because the fundamentals are strong and it's really run up. At this point, for me, it's a pass because kind of like the best days are somewhat behind it. And right now, the earnings will come out after the market closes. If they grow better than expected, the stock's probably going to rally. If they don't grow as well, the stock's going to come down. They are dealing with some pretty extreme forces out there. And I think this one here would be a good stock to take a look at in the desirability quadrants, because you really got to understand what's the story of that company. Are they going to really advance themselves? Are they going to be able to weather the competition? And for Okta, you're competing against some really big companies. And most notably, you're competing against Microsoft. Microsoft is the biggest software company on the planet, and they are a force to be reckoned with. And when I look at a company like a Okta, you have to tell yourself, okay, so Okta is competing against Microsoft, Google Alphabet, and other big players. Are they going to be able to fend off this particular marketplace, right? So let's take a look at competition. So they're good, but they're not dominant. it's not like a space where single sign-on is a very unique solution that only one company provides. No, Microsoft and others provide it. So I'm going to say competition. They do a very good job. Okay, they're growing. It shows. They don't have network power. I think that's actually a weakness. Microsoft has network power. Google Alphabet has network power. They're so big, customers will find it very easy to just sign a Microsoft contract that covers everything. That way, I don't have to make, sign up 10, 20 different software partnerships or contracts with vendors to get what we need for the whole business. Balance sheet looks great. Lots of cash. Looks good. Revenue growth looks good. And now they're a smaller business, so their revenue growth of 15% for a smaller business is just good. It's not great. Profitability, not great. This one here, I'm going to give them a C because you saw how their net profitability was not good. Cash flow was good, by the way. I'm actually going to give them an A on cash flow because they really did grow it. So you have some B's, some C's, some A's. It's a little bit of a mixed bag. And I think that Okta is a terrific little business, but they're halfway, I'm going to say 2/3 in the gray for me. And I would say that they're probably here more than on the other side. And the reason for it is they're not incredibly differentiated. Microsoft provides the same thing they do. And man, you cannot pick a stronger competitor to go up against than Microsoft. So they're in the gray with a little bit in the green because they are different. They were one of the original single sign-on companies, so they probably have a little bit of a better solution than others, but it's not like they're just kind of out competing everybody to the point where nobody else can operate in the space. No, Microsoft and everybody else can. So having said that, I would need a very strong discount on Okta, and that's not available right now. So for now, Okta's a pass. If they had a strong pullback, maybe it would be a consideration. But the big story I'm also afraid of, which is Microsoft going to rub these guys out? Now, that could be a possibility. The other thing is Salesforce announced they're going to acquire a business today, Informatica. I covered that earlier. Could Okta be an acquisition target? Yeah, definitely. Maybe AWS acquires them. Or heck, maybe even Microsoft acquires them. Or maybe some bigger software company acquires them. That's definitely in the cards. Most definitely could be a possibility. So interesting stock. Congratulations if you're an Okta stockholder. You've done really well year to date, and we'll see if the stock continues to roll up. So that is Okta. We'll see how they announce after the earnings are announced later today. For now, the stock is up 1%, not bad. The NASDAQ is up over 2%, so interesting. Now, these guys here are going to announce after the market. Was it before or after the market opened? Let's see here. So these guys after the close. So these guys are a miner. They're down in Chile. Oh, no. I got it wrong. Company offers specialty plant nutrients, including sodium, potassium nitrate. So they are a miner. They mine these minerals that go into the agricultural industry. So they mine these fertilizers and then put them to market. Year to date, the stock's down. Over the 1 year, it's down substantially. Now you would want to think that, hey, well, agriculture has got to be somewhat of a stable industry. That's what I'm thinking. These guys are a $9.4 billion market cap company in US dollars. Revenue is 4.5. So you're paying 2 times sales, and forward PE is 12. Current PE is not available, probably because they're losing money. And analysts think it's a hold, but it's discounted by 27%. Now they look at this revenue contraction is probably because this commodity is really being priced low. If the commodity price goes down, this company, it's not their fault, but they're going to really suffer the consequence of a lower commodity price. And I think that's what's going on. If you look at this stock after they announce, really important is to see where are commodity prices. Are commodity prices rising? If that's the case, maybe this is a good stock to buy while the stock is really discounted. So this company here, I'm going to look at the earnings just to see what's going on. Geographically, you'd be investing in South America, and obviously South America has to grow food, both for domestic consumption in South America as well as I know in the United States, we import a lot of vegetables and fruits from South America, and I'm sure the world does as well. So interesting company, a lot of red, but it's in an industry where you got to think it's probably going to come back at some point. Over the 5 years, you see when commodity prices are going up, this stock can really take off. This stock went from 32 up to $100 a share. So investors tripled their money in 2 years. So this should repeat itself. But we got to find the right time to buy into this stock. So this one here is going to be on my watch list for this earnings. I'm going to make myself a note and read the earnings because I think it's worth it. If I can find this stock is beginning to move up, it can really move up nicely over the next couple of years and double my money quickly, maybe even triple it. So interesting company that's going to announce after the market closes. Champion Homes already announced they're down 14%. Holy smokes. Down 18% year to date. Home building has got to be tough. Let's see here. Champion Homes engages in the production and sale of factory-built housing in North America. The company offers manufactured modular homes, park models, recreational vehicles and cabins, accessory dwelling units, commercial structures. Okay. So this business has been around for a while. So they manufacture homes and they get delivered to a site where they're going to be used. The 1 year breaking even, down 18%. And I know that interest rates, higher interest rates, have to be affecting this company. Let's take a look at their sales. Man, the revenue really grew, over the trailing 12 months, 22%. So these growth rates look pretty darn good. I'll open up their earnings announcement in a bit. Let me take a look at their profitability and see how desirable they are based on profits. This growth looks really, really good. For the most part, they've been a growing business. They had a bad year in 2024, but it looks like their growth over the trailing 12 months looks pretty darn good. And so free cash flow, 150 million, hasn't been very consistent, right? You've had 149 kind of matches what they did in 2021, and they've had cash flow grow and then come down. So interesting. Hey, Mike, good to see you. And you missed my comments on AMD, but I'll go over AMD real quick. They're having a very good day. If things haven't changed. And I thought about you, but let me get back to the stock we're covering right now is Champion Homes. So we've got cash flow of 150 million. Gross margins are 25 million. Okay. We've got 6% free cash flow. So the margins are super exciting. You can see that something's going on that's squeezing out profit from these guys. Something is eroding all that profit because in 23 they had really nice ratios here and they pretty much got cut in half. Now that's a concern. That would be a very big concern because this business, right, you're manufacturing homes, so you're getting lumber, materials, you're putting labor into this product. There's just a lot of costly components. So this one here is concerning. Now, let's take a look at their earnings. And the symbol here is SKY. Sky Investor Relations, not Sky Group. There we go. So Champion Homes. That's a manufactured home. That's a good looking manufactured home. Jeez, manufactured homes have gotten nice. I guess you make this in pieces, take them to the site, and then assemble them. And I live in California, and we have um, accessory dwelling units, ADUs. That's become kind of a popular thing for people to use part of their backyard and put it in an additional livable unit to help with the housing shortage that we have. So that's been going on in California. I'm sure it's probably also working or happening in other places that have scarcity of housing. All right, so is this going to give me what I'm looking for? So here we go. So sales increased by 10.7% in the quarter. Okay. U.S. homes sold increased by 5%. Backlog increased. So those numbers look good. Gross margin did expand. That looks really good. Earnings per share was good. So the earnings is positive. Is the guidance maybe what's sinking the stock? So, so the free cash flow is going to end up being 190 million. That's straight out of their cash flow statement. So the stock is down 14.7%. Why? Like, did they say something on their earnings that they're really concerned about the forward 12 months? Because the fundamentals look good. 10% growth is good. Their backlog is grown. That looks good. But I can't see any guidance here. Yeah, I guess one would have to listen to the earnings call and see if they did comment on, you know, their expectations for the next 12 months, and maybe that's where some of the concerns came out. But the fundamentals look good. Fundamentals look good. So not sure why 14.5% drawdown. That's pretty extreme. Interesting. Okay. So that is Champion Homes. Interesting little company. Semtech. What is this? Semtech Corporation provides semiconductor, Internet of Things systems, cloud connectivity. Okay. These guys are going to announce after the market closes. They're down a lot this year. Well, last month they've done well, and then down a little bit over the last 12 months. So curious to see how they announce later. All right, so yeah, so looks like you're commenting on Champion Homes. Yeah, from Little Red Riding Hood, or Three Little Pigs. Yeah, you know, the manufactured homes, my observation is they don't they don't retain their value because you don't own the land if you are in a trailer park. But I would say that if you're in, like, let's say Los Angeles, and you have a single family residence with a big yard, and you put a second unit in the backyard that maybe produces $2,000 of rent per month because rents are high in Los Angeles, you change the value of that property. because now you get to sell that home not as a single family residence, but almost like a duplex. So in that particular situation, I think the manufactured homes, the ADUs, it's going to be a different market. I think it could stand to be an investment for many. I know I've looked into it, but my family, we have a giant backyard. It's really nice. We have a really nice garden. And my family's like, no, no, you can't mess with our yard. So the cash flow wasn't compelling enough for my family to give me the green light on that. And I have to admit, losing that yard would be a loss for us. So, all right. So let's see what the market's doing, and I think I'm going to start wrapping things up, unless a member has a stock they want me to look at, or if you're not a member, consider being a member or a $5 super chat, and I could analyze a stock of your choice. So we've got Neil. Robinhood's up to 18. Oh, all-time highs. Okay, I'll take a peek at that. So Hood is it's the number one percentage performer in my portfolio. It's just been doing great. So look at that. Robinhood's up 4.69. If the market's going up, so is Robinhood. Look at that. Beautiful. Year to date, 77%. Looks good. Looks really good. Excellent. Go Robinhood. Robinhood's a terrific company. I've covered it many times. And the things I like is they don't follow the rules. They make the rules for what they believe is the new investor in the market that wants to invest differently than the traditional brokerages are willing to offer. I think it's a really, really good thing for investors to take control of their destiny when it comes to their investing and their net worth, frankly. And following what traditionally we followed is not the best thing for everyone. In fact, I don't do that. That's why I have a YouTube channel. That's why I do my own investing. Is I did do what traditionally is followed. I had individual stocks, but I also had, as an example, a wealth advisor that I paid, and I was unhappy with the results. So I'm a little older than the typical Robinhood investor. I'm 56, where Robinhood investors are probably 20 to 40-ish, and in general. And that investor, I'm glad that investors, really saying, hey, I'm going to invest on my own, and I'm going to figure this thing out. I'm going to learn every year, and I'm going to become a great investor and be in control of my destiny when it comes to my finances. That's great. So go Robinhood. All right. So good to see you, Neil. Thanks for tuning in. All right. So let's go to the U.S. NASDAQ up 1.95. Looks good. The heat map still looks nice and green. Looks real green. And even industrials are looking good. Energy's looking decent. Healthcare looks decent. Everything's green. Man, let's just close the market right now. 2% on Google, Meta 1.65, Nvidia is flourishing. And tomorrow that's going to be the big moment, is how will the earnings go for Nvidia. So year to date, Microsoft is doing well. It is the most valuable company traded on the New York Stock Exchange. Nvidia is doing okay. It's up a tiny bit. Apple is trying to heal up from all the wounds it's had this year. Amazon is in the red for the year. Google Alphabet in the red. Meta in the green. Meta's performing the best out of like the most valuable, just by a little bit compared to Microsoft. And it's having a good day. Tesla is in the red, but really coming back strong. Broadcom, slightly in the green. And Berkshire, solidly in the green. All right, so it's going to be a green day. It's going to be a good day. Whoa, I think I just saw a headline. DJT shares fall. Wow. So Trump media is going to buy 2.5 billion of Bitcoin. Wow. So I would expect Bitcoin is going to go up in value. Yeah, I think Bitcoin's going to go up in value. So we'll see. All right, guys. Tomas, how are you, sir? Hopefully you're enjoying a good day. So Mike, UNH, and Tomas, it looks like you just joined, but I was gonna potentially close out the stream unless you have a question or a stock you want to look at. Please let me know. In the meantime, I'm gonna look at UNH. UNH is down again. Oh man, well, guess I'm gonna be buying shares again. UNH is obviously a situation where the news is really just scaring away investors. And for me, it's a perfect time to buy. And Warren Buffett famously says, you buy when everybody's afraid. When fear is all over a stock, everybody's, oh my God, this is a scary situation. And the fundamentals tell a different story. It's a great situation. So I'm buying into United Health. And when I look at United Health, I'm going to go straight to my valuation. I see a business that is growing its top line revenue consistently, just a model of consistency across the top line revenue growth. It's growing its cash flows, tremendous cash flows, has great profits, and is discounted by 53%. So market wants to be afraid. I'm good. I'll buy United Healthcare because when the market becomes unafraid in a year, in 2 years, in 3 years, it's going to double the value of my investment. And that's very simply stated. I've covered United Healthcare 5 to 7 times in the last 2 weeks. So if it falls again, I buy again. Thank you very much, stock market. I appreciate the discount. So Tomas. So you're sitting on Disney. Nicely done. Disney has been doing well. Up 2% over the last month, up 24%. And I know the year to date is going to have a mixed bag, but geez, you look at low point to the high point, 37%. Disney continues to be a little bit discounted, but here we're at 53%, right? And Disney's discounted by 24%, and we've seen their stock really fly up. I think deservingly, the new CEO is doing a nice job. I'm not buying Disney stock, but I'm buying United Healthcare stock. I think I could double my money on United Healthcare in the next 2 years. Disney, I can't say that. I think Disney 2 years from now is going to be worth 20%, maybe 30% more. That would be my response to your question on comparing Disney to United Healthcare. So good luck, Tomas. Great talking to you on Sunday. I think we talked on Sunday. You were on the investor call. All right, so A-Lab just sold. You sold out of A-Lab, huh? What's going on with A-Lab today? Oh, beautiful. Now, this is what I'm talking about here. When the market says This is a great company. It's grown by 200%. It's worth a lot of money, and it just ramps up the stock, and everybody wants it. But then the market turns and it goes risk off, and it sells it off like it's just worthless. Sold it off by 63% in a matter of 4 months. It's a great opportunity. So, Mike, I hope you're ringing the cash register, taking a nice gain. Nicely done, sir. Beautiful. Nice. Now, ALAB. Man, what a good example there. ALAB's going to go where NVIDIA goes. If NVIDIA has a tough day tomorrow, ALAB's going to have a tough day tomorrow. It's guilty by association, or it's going to thrive by association. Today, NVIDIA is rocking. It's going up. So is ALAB, right? But ALAB is going to trade with higher volatility than NVIDIA, because NVIDIA is the big monster, right? $3 trillion market cap. ALAB is this tiny little company growing at 200%. It's just tiny little company. Let's take a look at comparing the two. If you look at that year to date, you see that Astera is really, they started kind of around the same time, but when it sold off faster, harder, more extreme than NVIDIA. And it's been coming up with NVIDIA. See how it's just tracing the same chart, but it's been more extreme. In my opinion, it's better discounted than NVIDIA. So that's why I bought into it. So yeah, ALAB, as we watch NVIDIA, it's going to tell us what ALAB's going to do. So great seeing you, Tomas. Mike, always great to see you. Man, we're in United Healthcare. Come on, United Healthcare. Let's get that stock healthy again. Real quick. I remember I said ELF was a good buy. So ELF, this is beauty. Wow, look at that, nice day. It's had a rough year. It's had a great month. Oof, man, it's coming back strong. Now, which super investors own ELF? One super investor, Poland Capital. Okay, but I think it's Michael Burry. He owns a Estee Lauder. So I guess beauty product companies attracts super investors here or there. So ELF, most definitely, look at that, 76%. Beautiful. Man, you must be killing it this year, Mike. Nicely done. I'm have to start adding you to the super investor rankings. So Metal Notice. So your question is, why do fundamentals show up as United Healthcare being more valuable, but the stock's down so much? Well, let's kind of recap on the negative stories. First, their CEO got assassinated. We don't see that. In my lifetime, I've never seen that. So their CEO gets assassinated. And and I'm just kind of reporting the news here, guys. I'm not making a judgment call. Some reports, and I think some sentiment was that, United Healthcare was kind of a bad actor in the whole healthcare space. I'm not agreeing with that. Our healthcare system is our healthcare system in the U.S. And I'm actually a United Healthcare customer. I've been a customer of theirs for 21 years. And I would say that I'm a very satisfied customer of their healthcare. I've raised 2 sons, and United Healthcare has been there through a kid with a certain condition. My kids are healthy. Thank you. Every time we called them, it was a very generally a positive, constructive, productive conversation, and my wife really appreciates having United Healthcare. That's one family's experience with United Healthcare. I'm sure there's a couple bad ones out there too. So first order of business is you have the CEO got assassinated. Horrible, horrible news, terrible. And the bad practices, it's the healthcare industry. I'm going to call it what I think it is, which is it's the practices. People don't like them. Okay, talk to your politician. Change the laws in the United States. United Healthcare and the other healthcare companies follow the laws. And some people get bent out of shape when, you know, a company makes a decision that acts against them, right? I get that. But you can't kind of throw them out as being a bad actor if like a couple people have a bad experience. The other bad news that's come up is the CEO resigned, and the guy was older, and I don't know that he wanted the job. I think the previous CEO got it, I guess 2 CEOs ago, got assassinated. The replacement CEO is kind of like rushed into the situation, and for all we know, the guy had already planned to retire, and he's like, "Oh, now we got to be the CEO." Hey, I was planning on, spending time with my grandkids, or I was planning on, spending a year traveling to Antarctica. I don't know. The guy wanted to do something, and now he's out. So that's a negative story. Overall, those negative stories are happening. Now, Warren Buffett, of all people, will say the way you value business is you look at the business. You don't look at the management team. If a quality business is going to stand up on its own with a good management team, it's going to make it even better. But that's what I'm buying into, is the United Healthcare business, number one in the market. And I think I'm getting a great value out of it. So thanks for asking that question. Hopefully that conversation was valuable. Oh man. Well, I'm hanging in there with A-Lab, buddy. And when A-Lab is up, I don't know when I'm going to sell A-Lab. I think when the story changes, I would sell it. So Tomas, good luck, buddy. Metal Notice, you're welcome, sir. Thanks for showing up. Appreciate the question. All right, everybody. So let's call it a stream at this time. I'm going to stream later today. I'll put the notification out there maybe in about an hour. But thanks so much for joining me this morning. I really appreciate it. And I appreciate all the members that attended today, and I appreciate your support. We've had a number of them. Let me just repeat what I shared earlier. We've had a number of new members, and I appreciate that very much. Please get me your email address so that I can get you all the perks. And my email address is victorhinvesting@gmail.com. Email me and get me your email address so I can add you to a shared directory, member calls. You get to see member-only videos, which I produce, 5, 6 of them each week. And you'll have access to those. And you'll have access to the shared drive is going to have the tools that I use, as well as a copy of the valuations that I perform each month. So I want to make sure you get value out of it, and I appreciate your support. So that is it for this stream, everybody. Enjoy the positive green day. Hopefully you have an awesome day. Thank you for tuning in.